CA Rajiv Hira will address us on corporate tax and its implication with AML. Rajiv is a practicing chartered accountant with experience of leading roles in private and multinational financial institutions for over 25 years. Extensive expertise in strategic and taxation, ERM implementation, process design, review across credit risk and operation risk, audit function and regulatory engagement. He has experience of working in Asia, Africa and Middle East. Hands-on experience in engaging with regulator and governing body in a space of AML and CFT. This involves understanding and strategic intent and implementation objective for compliance. Friends, can we have a huge round of applause for CA Rajiv Hira?
Hi, good morning all. I think corporate tax everyone knows. What is the rate of corporate tax? So we are not getting into that. This session is not about getting into the nitty-gritty of corporate tax. As Naveen ji said, enough of videos, enough of seminar sessions are available. But just for the matter of quick conversation, is illegal income taxable? Okay. So the answer is illegal income taxable or not taxable? Authorities have no view about color of the money. It is going to be a taxable income. Whether you earn from smuggling, drug, traffic abuse, whatever you do. So it's a very simple thing. It's going to be a taxable. So that's a known fact, and we can see this as part of the regulations from India, UK, US, whichever sections you go. That's a very clean view. In corporate tax UAE also, there is no mention that what incomes are going to be taxable. They said it may include. That's the first part. Second, which is interesting, can we allow expenses on illegal income? Yes, no. There are both views which are there. That's why I'm putting up a question mark. How UAE is going to take, we don't know. In some jurisdictions, we have seen what they have clearly said. Since income is taxable, expenses related to them are taxable, but you cannot adjust the losses from illegal income with the legal income. That's a one part. In some jurisdiction, they said, sorry, since the act is completely illegal, we will not allow any expenditures. So there are both judgments which are there. I have seen from a US perspective, there is a judgment which allows up to the income, but not losses to be set off with other income. So that's one part. In India, UK, and in US also, there are some judgments which said, no, we will not allow it. I can just say about a very simple thing. There are some drugs which are legally allowed from a medicine perspective. So Murjana. So if that kind of a drug is being traded, now there is an objective. You have some trade licenses which are allowed to do that business. So there is availability. But if you're talking about something which is completely illegal in that country, in those cases they have said that, no, we will not allow any expenditures also. Now what happens if it is being found that someone is doing a trade with a sanctioned country? So trade with a sanctioned country is a legal business, illegal business. Illegal business. So that means we are saying we will not allow you the expenditure also to be claimed if that comes as a stand. Right? So it's not now about a VAT, which is a smaller portion. It's about the holistic game of the total transaction which is coming into the question mark. Example, if you do a trade where you purchase something for $1 million and you sell it for $1.5 million. So you're making a profit of $500,000, right? So on a normal sense, we could think that, okay, $500,000 should be taxable, but in this case, situation may change and the taxes may come and apply to $1.5 million. So that's a one point which comes as a takeaway to look at. Now, what are the legal and illegal businesses from a UAE perspective? We can debate, we can discuss, but on a high level. There are a lot of people who are doing freelancing without having a due freelancing visa. Can we allow those as an expenses? In our books. Example, we have a legitimate vendor from a camera perspective, but let's say I invited someone, do a photography into the event, and we'll pay you few dollars. If I'm paying those few dollars to a freelancer, will that be allowed as a corporate tax expenditure? No. Yes. So there may be a debate on discussion, but my view, it may not be allowed because it's not a legal business which is being done from a UAE perspective. So it's going back to corporate tax is pushing us to do a KYC of a client. Making sense where we get into? So you have to do a KYC of a client to understand whether he has a right trade license or not, right business or not, a right model or not. So it's a intertwining linkages which are coming up. A lot of time we have seen newspapers in our home country and in various parts of the world where someone is being found with illegal transaction, maybe a smuggling, maybe a fake money, maybe drugs. It can be anything. Maybe just routing of funds from home country to a foreign country or a foreign jurisdiction. In those cases, not only tax authorities wake up, they also get PMLA, FEMA involved as part of those transactions. So if there is something which is happening on one side, it does not stop and it moves into a various tangent and various discussions. We are not complicating it, but we are just trying to connect the links which regulators are also going to look at. We have seen customs and VAT is quite interlinked now. A lot of information which is there with the custom authorities are being shared with VAT authorities and vice versa. So is under invoicing, over invoicing okay? No. But still, are we finding those instances in some form and fashion? So I am not saying anything. So this is again one article which is of 14th Feb 23. I'm not getting into too much of details, but just to give you a perspective. IT department raises tax demand for 15,570 CR, and they implemented BMA, which is Black Money Act, and PMLA and FEMA on this action. So it's as simple and it's as complicated as what gets linked at where. This is where it is going into. It's just a news article which clearly says, and this is not the unique article. Let's not blame poor this guy only. This is not the unique article. Whenever something goes in that tangent, we move and we pick up everything and all the things as part of the connection story. From a sanction perspective, we clearly know which are the countries sanctioned partially and fully. Which are the countries sanctioned? Iran and North Korea. These are two properly sanctioned countries, I will say, use a word. And balance are restricted, where there are some trades which are allowed, some are not allowed. So all Mali, Somalia, Congo, all these are part of this restriction one. But is this available in the portal in the UAE government authorities section? Available. Anyone who is DNFPB, who is part of FI, who is part of banking system, financial system, definitely knows it. Is the sanction applies only for a certain category of customers or certain category of people, or it applies to everyone? It applies to everyone. If I am automobile trader, if I am a rice trader, if I am just doing a trading of XYZ activity, or I am a service guy, I am not a DNFPB, is AML applicable to them? It is applicable. Who is supposed to check that? Auditors. So they have put up the gatekeepers which are moving out from a normal scenario to an auditor space. It's not only auditor. All accountants, all professionals, even tax advisors are part of it, which comes into the whole ambit. Not to get into a very different discussion, but what is a business? Now, this is again one part which is being discussed. Anything which is done continuous, blah, 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 we know the section. Very simple. So I refer to a very simple story which is talked about. In case a freelancer comes on the table and does an activity, it is allowable, not allowable. That's a discussion point which we talked about. But there are a lot of people who are doing business without having a trade license. Very simple example, selling and buying of used cars. So people buy a car, assemble it, rectify it, and just go and sell it out. Will that constitute to a business? Depends on a lot of factors. Whether he has transferred the vehicle in his own name, does on continuous basis, is there a financial transaction which is coming up, what is the value of threshold of the transaction which is coming up. So all those sections defines whether this is a business or not. So it's not, again, as a matter of repetition, we are referring corporate tax is not only for companies, it may apply to individuals. if we do a business in a different fashion and form. So that's a plain definition which is picked up from the law, and it has a very deep meaning into the activity itself. So what we do about freelancing and part-time? We have seen a lot of time where an employee is having a visa with an organization and he works part-time at somewhere outside or somewhere outside the organization. So where should we club that income of our employee? Example, I have 2 employees and one of the employees is doing a part-time job. He said, Rajiv, I am getting some tuitions. Can I do that? I said, okay, go ahead. So far, it's not bothering my day. Go ahead. And he's earning only few dollars, right? So where should I aggregate that income? If he does not have any freelance license, does not have any part-time license, is it not part of the business where he is being given visa for? It's a business income. So do we need to do a compliance for our staff or not? Is a question mark which is coming up. Exactly. So this is what we are getting into. You need to look at a compliance from a staff perspective. Ensure at least you have a disclosures stating that they are not working anywhere outside. If they are working, they are disclosing it back to you, and you report as per everything which is coming up. We have seen people are getting those money in the bank account. So that's more dangerous than anything else. I'm not getting into how people will find, what people will find, from where they will find. We are not getting into that point. We are getting into, if a compliance angle comes into play, are we in the right space or not? So how to find, I think we should leave it to the tax authorities to see how to find those things. But that's where it comes into. Now, if you look at a very broad perspective, again, we are coming back. Very simple slide. Why corporate tax is coming? Simple. Tax transparency and preventing harmful tax practices. So again, coming back to the tax is not only for the sake of collecting the money, and my next speaker is going to talk much more in detail about what are the intertwining linkages which are coming up. It is coming on 1st June 23. Everyone remembers that. I don't have to get into that slide. Rate, we know 0%, 9% for a free zone. I'm just repeating that for the quick, just to give a perspective that there is a corporate taxation also. Now, if you see, the intent of UAE has changed very drastically, and this is one of my favorite slides, comes in every presentation which I do. It started from 2018 when we saw the VAT, we started walking in. I think we are pretty fine and comfortable. We understand largely the compliances. I will not say all, but at least at a large level, we understand what is there. It came as inclusive framework from a BEPS perspective. Now, what is BEPS and how the BEPS came? I'll just talk about it in the next slide. This is base erosion, profit shifting. We all know the framework. AML came in 2018. I can still see the person is still not able to stand. He's still crawling because a lot of issues and gaps are there. And as a matter of fact, the country is still in the grey listing. So that itself says that we have a lot of action to do. CBCR, we got saved because the reporting category got changed. Initially, if we have gone into the previous law, we would have been a lot of catch-up is required. But as we talk, the CBCR framework talks about only the parent company or the ultimate parent company to report. So that's where we are saving. ESR, we are comfortable, but it goes back again to the corporate tax. I'm sure this guy will again come to the kneel when the corporate tax comes and we start talking about substantiate the economic substance of yourself in the country. So that will change. Beneficial owner, still we are struggling. Even we are struggling as a corporate also, because when we ask people to give us a UBO details, the answers we all know what's coming up. So we have to go for some via media, some long stories to pick up those information. We are still struggling. They have come up with a national economic register. I'm sure a lot of people must have seen. If you go in the National Economic Register, put up the name of the company or a trade license, you get details. Now, those are not comprehensive so far. They are only giving details whether trade license is valid, what activity. Maybe sometime you have a contact number to catch up the company. But UBO details still are not coming up. We are expecting that should happen very soon because this is one of the action plan which is being recommended by FATF also. Corporate tax, we are still in the question mark stage because cabinet decisions have to come. Executive regulation may not come, but there are a lot of small decisions which will come, and we have to combine those and look at it. There are multiple things on taxable person. I'm not getting into this, but I'll just show you something on the BEPS framework perspective. There are 15 action plans which were there in the BEPS framework, out of which, if you see, 4 are minimum standards. And that is what is getting applicable from a corporate tax perspective. Point number 1, harmful tax practices, prevention of tax treaty abuse, country by country reporting, and mutual agreement procedures. So these all 4 are intertwined into the corporate tax also in a quite a big way. So my take from a corporate tax perspective is we know what to be done. That's perfectly fine. Everyone has got a lot of understanding on a corporate tax. But why it is required to be done is the most important thing which we need to grab into. So we will talk about more whys than what, because what is available in the law, and you will get quite a handful story on that. Anyone has seen this report? It came in 2020. Not read, maybe it's okay. It's a long document. A lot of people have seen. Whoever has connected to AML space definitely must have seen. If not seen, please pick up, at least go to the executive summary. It's not a too lengthy one. 7, 8 pages, 9 pages are there. You will understand the why in more detail, because that's a starting point for any action which we are taking from a compliance perspective. Now, why I said this? Because if you see, these actions came in 2020, right? 2 years, 3 years back. Still, they are relevant. Still, there is a lot of push happening, and you will see how the ecosystem is working in and around that. First, strengthen. First thing, they started with the training. Do you see a lot of trainings happening from AML and corporate tax or not? So that's not coming by default. It's a design. So there is a push that please train your people, please train this country to get more into a compliance part. So thank you all for being part of this. So we are also training ourselves to get into that space, and we are looking at how we strengthen financial intelligence unit. So do we get a hang of what is FIU? Today you came in India Club, someone knows it. Now a lot of people will ask how. You parked your car, you used RTA, your RTA number is linked to your license, your driving license is linked to your car, and in turn linked to your Emirates ID. So someone wants, he knows where you are. Every transaction in the banking system, if you see, we have a couple of good banking friends also, we'll talk to them also, are getting tracked. If you deposit a cash into a lot of ATM machines, they're asking for a Emirates ID if you are not an account holder. Why? Who has deposited cash? And there are cases, there are clients who have got an inquiry. We are finding an employee of Y organization whom you don't have any financial transaction, keep coming and depositing cash in ATM. Can you explain what transactions we do with them? So those kind of inquiries have started coming up. So there is an intertwining linkages which is coming up at a FIU level in a quite a holistic way. They have come up in a custom attestation. Why they are coming up with a custom attestation by MOFA? It's not only about fees. So there is a tracking mechanism which is getting developed, so which is where it's coming into. DNFPB compliance, so this is again one part we all know. We are part of that journey since 2020 especially, and we have seen that. Adoption of new tools. So there is a good push to FIU even that you have a data. Now what are the tools to analyze the data? So there are the action plan is coming back again to the FIU perspective, that how you are churning out the data, what kind of results you are bringing up, what kind of inquiries you are doing it. So that's still WIP, and I can tell you a lot of actions happening on this space from a FIU perspective. Coordinate between agencies and authorities. I'm sure you must have read the newspapers and articles where authorities are meeting together to exchange ideas, to do a training within the authorities also. I have seen very recently, and I can say that all the registration authorities are becoming much more active. They are asking much more questions than they were asking. Initially, they were only looking at company formation. You form a company, thank you very much. But now they're asking further questions. Okay, you have formed a company, it's already 1 month. What you have done? You have formed a company, we found you have purchased this much of properties. Can you explain the source? So all those questions have started coming up from the registration authorities, and I'm not naming any one. We have seen this coming from various places. So as we work on the AML space, we work on AML space. So a lot of time get misinterpreted as we work on ML space. No, we work on anti-money laundering space. So when we work on this space, a lot of people come and show us the cases, basically a letter from authorities. How should we respond that? Simple answer is, whatever you have to respond that way only, or shut and go. So there is only second things which are coming up. Stringent legal and federal framework. So there is a push to show the freeze of money also. Don't only come with the legislation, we have done this, we have done that. How much money you have frozen? So that's the reason you are finding the newsletters, you are finding the articles from tax authorities which says, this month, this number of SAR and STR and SAR are being raised, this much money is being frozen, this much money is being confiscated, and all those things which are coming as a news articles. It's not coming by default, again I'm referring to. So there is a design, there is a document which is coming up. And this is not my document. I'm saying this is there in 2020. You can go back and pick up that. We have put up some videos also. At that time, we did some event where we talked these things are going to come up very soon. And we are seeing those things coming up. Central money laundering enforcement and custom intelligence. So this is again one of the reasons why custom authorities are asking the information which they're asking. Strengthen implementation of TFS, targeted financial sanction. This is again one of the focus where proliferation section has come up. They are not only stopping at the anti-money laundering space, they are looking at how the transactions which are happening where the products can be used for mass destruction, how the controls are being built in. It's a very simple and very complicated process where HS codes are getting tracked and the questions are coming back to the traders, manufacturers, that when you have done this kind of a business, what kind of a due diligence you have carried on to hand over those transactions. Risk-based approach from a supervisor perspective, so that's where the lot of push also is there from a DNFPB perspective to see how we can claim it out. Do you think all this coming up as part of a corporate tax or no? Are these connected? We are not talking anything in vain, right? So if you now read the law and connect all these dots, you will find all these points are part of the corporate tax, and we don't have to actually create a linkage. There is a very clear linkage which is developed, and it's also working in. Again, tax crime, they have talked about very simple thing. This is not my slide. This is a slide from FATF which says that criminal activities are on account of inadequate legal framework, lax regulator is not very active, weak interagencies cooperation, 2/3 of illicit flow involve tax evasion. So, and secrecy. So if you remove all these things, your tax evasion will reduce or money laundering will reduce. Are these factors not being inculcated as part of a corporate tax? If you have read the public consultation document, they have clearly said, we are going to work on all these parameters. So that's an open point which is coming up, and again re-emphasizing back into the corporate tax story, what it comes into. Again, going back to one simple legislation, there is a little confusion on the news article and the document which is there in the customs records. It says any cash which is more than 100,000, if it is imported in UAE, has to be declared. If it is not declared, it is considered as a not non-legitimate money. So a lot of time we have seen clients comes and gives us a huge value of cash to the clients, and client says, no, he gave me a cash, I accepted it. The question comes is from where the cash is generated. No, he is an exporter. He comes from foreign country and gives me a cash. How? Point number one, he cannot import more than 100,000 legally. Point number two, how the cash is generated otherwise if he doesn't have any local system. So this is again going back to the premise of can we connect it out? Now my question is as simple as that. I sold goods for 100,000, let's say for 200,000. I received cash for 200,000, and the person from where I collected cash does not have a local presence. Correct? and my cost of goods which I sold is 180,000. Will 180,000 be allowed to me as a deduction or not? I don't know. Because in this case, my source of funds, illegal income, if I just translate into a quick reference, it's an illegal income. Income should be clubbed. Expenses, we don't know. Till time, more clarity, more case laws. And we have prominent speakers who are going to come further also to talk about those points. So we want to see how these things is going to be allowed. There is a general anti-abuse rule also which says if you don't have a valid commercial activity or other non-fiscal reasons which reflect economic reality. So can I connect back to the points which I was referring before? So this is GAR principle which is coming from a corporate tax only. So far we are only referring this for corporate structuring, company formation, creating a corporate structure and all. So I'm just keeping one more perspective on what all things can change into. I'll stop here. I'll invite Shashwat to connect on multiple dots which are there further.